Hey there, so you want to build a $10,000 crypto portfolio, starting from literally $0. Sounds impossible? Well, today I'm going to show you a realistic roadmap that even beginners can follow. And don't worry, no confusing jargon, just simple, step-by-step guidance. By the end of this video, you'll know exactly what to do to turn small beginnings into a serious portfolio. Step 1. Start with knowledge, not money. Before you even think about investing, the most important thing is learning the basics. Crypto can be risky, and if you dive in blind, you could lose money fast. Why knowledge matters? Think of crypto like a video game. You wouldn't jump into the final boss fight without knowing the controls, right? In crypto, understanding the market, coins, wallets, and risks is like learning the game mechanics before you play. Key beginner concepts. Wallets, where you store your crypto. Think of it like a digital bank account. Exchanges, platforms where you buy and sell crypto, like Binance or Coinbase. Market cap, the total value of a cryptocurrency. Tells you how big or small a coin is. Volatility, crypto prices move fast. Sometimes up, sometimes down. Recap, start by educating yourself. Read articles, watch videos, and follow crypto news. Knowledge is free, it costs nothing but time. Step 2. Start small with what you have. Even if you don't have $1,000 to invest, you can start small. Many beginners think they need a huge amount of money to start, but that's a myth. Example, you can start with $10 or $20 using apps like Binance, Coinbase, or Kraken. Focus on coins with long-term potential like Bitcoin, Ethereum, or some carefully chosen altcoins. Tip: don't chase hype coins blindly. Research each coin and ask, what problem does it solve? Who's behind it? Is the team trustworthy? Recap: start small, invest in quality coins, and don't get greedy too fast. Even tiny amounts grow over time with patience. Step 3. Learn dollar cost averaging, DCA. Dollar cost averaging is a game changer for beginners. Instead of investing all your money at once, you invest a fixed amount regularly, weekly, bi-weekly, or monthly. Why it works? Crypto prices go up and down. Buying regularly averages out your cost. Reduces emotional decisions. You won't panic if the price dips. Example, if you invest $50 every week for a year, that's $2,600. But because of price fluctuations, your portfolio may end up higher than just investing all $2,600 at once. Recap: DCA helps you invest consistently and reduces stress. Think of it like planting seeds, you water them regularly, not just once. Step 4. Diversify your portfolio. Never put all your eggs in one basket. Diversifying protects you from sudden crashes and maximizes growth potential. Simple diversification strategy. 50% in Bitcoin and Ethereum, the safest bets. 30% in promising altcoins, like Solana, Polygon, or other growing projects. 20% in high-risk, high-reward coins for potential big gains. Example, imagine Bitcoin drops 20%, but your altcoins rise 30%. Your losses are balanced, and sometimes you even profit. Recap: diversification equals risk management. It's like having a balanced diet for your money. Step 5. Keep track of your portfolio. Tracking your investments is crucial. Use apps like CoinMarketCap, CoinGecko, or Delta. Why tracking matters? You know your total portfolio value. You see which coins are performing well and which aren't. Helps you make smarter decisions instead of guessing. Recap: treat your portfolio like a business. Track every move to grow strategically. Step 6. Reinvest profits. Once your portfolio starts earning, don't cash out everything immediately. Reinvest your profits to accelerate growth. Example, you invested $1,000. The portfolio grows to $1,500. Reinvest $500 and keep $500 as savings or reinvest further. Recap: reinvestment compounds growth, just like reinvesting in stocks or starting a small business. Step 7. Stay updated and adapt. Crypto markets change fast. Coins rise and fall quickly. Staying updated is essential. How to stay informed. Follow crypto news channels and blogs. Join communities on Reddit or Telegram. Watch price trends but don't panic sell. Example, if a promising project announces a major upgrade, its price could jump. Being aware lets you act before others catch on. Recap. Staying informed helps you make calculated moves instead of gambling blindly. Step 8. Set realistic goals. Building a $10,000 portfolio won't happen overnight. Set realistic, incremental goals. Example, Month 1. Learn and start investing $100. Month 6. Grow portfolio to $1,000. Month 12. Aim for $3,000 to $5,000. 2 to 3 years. Reach $10,000 with consistent investing and reinvesting. Recap. Small, realistic goals keep you motivated and prevent disappointment. Step 9. Avoid common mistakes. Many beginners make the same errors in crypto, and these mistakes can cost a lot of money if you're not careful. Recognizing and avoiding them early is crucial for building a successful portfolio. One of the biggest traps for beginners is buying a coin just because it's trending on social media or everyone is talking about it. While some hype coins do rise, most are driven by speculation rather than real value. Buying without research can lead to huge losses. Imagine a coin suddenly jumps 200% overnight because of a viral post. You invest all your savings, only to see it drop 70% the next week. If you had done basic research, you would have known that the project lacked a strong team or long-term potential. Another common mistake is selling during a dip out of fear. Crypto markets are volatile, and price drops are normal and expected. Panic selling locks in losses instead of allowing time for recovery. For example, if Bitcoin drops 20% in a week, it's tempting to sell to cut losses. But historically, major dips have often been followed by rebounds. Staying calm and sticking to your plan is essential for long-term growth. Many beginners also make the mistake of investing money they can't afford to lose. Putting funds meant for rent, bills, or daily expenses into crypto creates unnecessary stress and often leads to impulsive decisions. Always invest only disposable income, money that won't impact your life if temporarily lost. A simple but powerful tip is to always have a plan. Decide in advance when to buy, when to hold, and when to sell. Treat crypto like a business, not gambling. Emotions are your worst enemy. Fear and greed are the two feelings that will sabotage your portfolio faster than any market crash. Additional strategies to avoid mistakes include keeping a trading journal to note why you bought or sold each coin, which helps you learn from past decisions. Avoid listening to random gurus online and only trust verified sources and your own research. Setting stop-loss limits can protect your portfolio from extreme downturns. And always remember that slow, steady growth beats chasing fast profits every time. Mistakes cost money, but they are also learning opportunities if you analyze them carefully. Plan ahead, stick to your strategy, and don't let emotions drive your decisions. By avoiding these common pitfalls, you can protect your investments and steadily grow your crypto portfolio over time. Recap: mistakes cost money. Learn from them but plan ahead to avoid them. Conclusion: building a $10,000 crypto portfolio from zero. Building a $10,000 crypto portfolio starting from literally zero might sound impossible at first glance. Many people think you need thousands of dollars up front or a stroke of luck to reach that goal. But here's the truth: it is absolutely possible. The key ingredients are knowledge, patience, consistency, and a well-thought-out strategy. Without these, even large investments can disappear quickly. With them, even small investments made over time can snowball into substantial wealth. Let's break it down. First, knowledge is your foundation. Before putting a single dollar into crypto, you need to understand what you're investing in. Know how wallets work, understand how exchanges operate, and be familiar with the basic metrics like market cap, liquidity, and volatility. Knowledge reduces mistakes and gives you confidence to make smart decisions instead of gambling blindly. Next, patience is essential. Crypto markets are notoriously volatile. Prices can swing dramatically within hours, and it's easy to get emotional. Remember, building a $10,000 portfolio isn't about hitting it big overnight. It's about small, consistent steps. Think of it as planting seeds in a garden. You water them every day, protect them from pests, and give them sunlight. Over time, they grow into strong, fruitful plants. Crypto is no different. Your investments will grow steadily if you stay patient. Consistency is just as important. Small amounts invested regularly often outperform one-time large investments because of the magic of compounding and dollar-cost averaging. For example, investing $50 every week may not seem like much, but over a year, that totals $2,600. And because of price fluctuations, the portfolio value could actually grow more than if you invested the same total amount all at once. Consistency allows you to ride the ups and downs of the market without panic. Strategy ties everything together. You need a clear plan for which coins to invest in, how to diversify, when to reinvest profits, and how to handle losses. A portfolio without strategy is like sailing a boat without a map. You might drift, get lost, or even capsize. Diversification, for instance, protects your portfolio. Investing in multiple coins with different purposes and growth potential spreads risk and increases your chances of winning big. Another crucial point is tracking your portfolio. You need to know where your investments stand at all times. Using apps like CoinMarketCap or CoinGecko allows you to monitor performance, identify which coins are underperforming, and adjust your strategy accordingly. Tracking is not just about numbers, it's about making informed decisions and learning from patterns. Reinvesting profits is also a powerful growth strategy. Instead of cashing out everything once your portfolio grows, reinvesting part of your earnings accelerates compounding. For example, if your portfolio grows from $1,000 to $1,500, reinvesting $500 allows that amount to continue working for you while still letting you secure a portion as profit. This approach builds a portfolio faster without needing additional external capital. Finally, avoid common mistakes. Beginners often chase hype coins without research, sell in panic during dips, or invest money they cannot afford to lose. Mistakes are expensive in crypto, but they are also valuable learning experiences. The goal is not to avoid mistakes entirely, but to minimize them by planning ahead, staying informed, and keeping emotions in check. Recap: building a $10,000 portfolio from nothing requires a combination of learning, patience, strategic investing, and smart money management. It's not a generic get-rich-quick scheme. It's a journey. Every step you take, from researching coins to reinvesting profits, brings you closer to your target. Stay disciplined, stay curious, and continue learning. The journey itself teaches you skills that will benefit you in all areas of personal finance, not just crypto, turning knowledge into wealth. If you follow this roadmap carefully, even starting from zero, you can steadily grow your portfolio and eventually hit that $10,000 mark. And the most exciting part? While you're building your portfolio, you're also building something far more valuable: skills, habits, and financial discipline that last a lifetime. Think about it. Anyone can throw money at crypto and hope for the best. But only those who combine knowledge with action, patience with consistency, and strategy with adaptability truly succeed. By following these principles, you're not just investing money, you're investing in yourself. Let's break this down a little further. 1. Stick to your dollar-cost averaging plan. Consistent investment beats emotional decisions every time. Even if the market dips, regular investments average out your purchase price and reduce stress. 2. Don't panic during market dips. Market volatility is normal. Remember, short-term drops don't erase long-term growth. Panic selling is the fastest way to destroy your portfolio's potential. 3. Reinvest profits wisely. Let your gains compound to accelerate portfolio growth. Even small reinvestments make a huge difference over months and years. 4. Keep learning and adapting. Crypto is constantly evolving. New projects, technologies, and market trends emerge all the time. Staying updated ensures you can take advantage of opportunities before others notice. Extra tips for maximum growth. Review your portfolio regularly but avoid obsessing over daily price movements. Join communities to share knowledge and learn from others' experiences. Set realistic, incremental goals rather than expecting overnight wealth. Keep a portion of your portfolio in safe, stable coins to balance risk. Final thought. The $10,000 target is achievable, but the real value lies in how you get there. By following this roadmap, you're creating a foundation of knowledge, discipline, and strategy that will serve you well beyond crypto. Remember, wealth is not just a number, it's a combination of money, knowledge, and habits. And by starting from zero and steadily growing your portfolio, you're proving to yourself that success in crypto, finance, and life is possible with the right mindset and approach. So stay patient, stay consistent, keep learning, and step by step, you'll reach your $10,000 goal and possibly much more. If you found this roadmap helpful, make sure to hit the like button and subscribe so you never miss crypto tips for beginners. Drop a comment below sharing which step you're going to start with first. I'd love to hear your plan. Don't forget to turn on notifications to stay updated on the latest strategies to grow your crypto portfolio. Remember, building wealth takes patience and consistency. Start small, stay disciplined, and keep learning. Your $10,000 crypto goal is closer than you think.